All right, so here we are again. Another quick lesson. This one's a little bit more like complex to learn though. It definitely took me a minute, but man, like it kind of follows along the line of um of trend reversals, um breaking structures, like I went over before and change a character. Um So with this one, we're going to talk about an SMT divergence. All right. Now, when you get an SMT divergence, you have to first find a pair that is correlating to each other. So in this, say for instance, in this example right now, we have NQ with the ES, which is S&P 500. Now, we find the correlation in this pair, and then we would just like to look for with an SMT divergence, we're looking for either a swing low or a swing high to be taken out, okay? And then the other pair that's trading correlating to it to do the exact opposite. So what I'm gonna do is I'm gonna show you today a trade I actually took today, which was right here. Okay. And let me see exactly what time that was. Okay, this is 11:30. All right, so in this general region, I was looking for a buy. Why am I looking for a buy? Because we have these lows, these lower lows being put in, okay? And then we had this previous swing high right here, like I discussed before, taken out by a candle and not just a wick or anything like that. This is the candle, so great momentum. So we took out this swing high right here, this period, this area right here, and then we took out this swing high. Okay, so and this also was with a body candle. So that was my indicator right there that we were going up. Okay. I don't care about any of this candlestick, right? I didn't care about none of that, okay? Because we already took out this, and that was my clear indication that we're going up. Did I hold this trade for as long as I wanted to? No, because I had to go to the gym. And yeah, don't want to overtrade. So, but okay, so I will show you right now. We got look at the times. The times are very important when it comes to SMT divergence. Okay, so we see right here 11:30 candle, swept liquidity. Okay, which is right here at 10:55. All right, so we're gonna go over here to ES. Okay, we see here that the 11:30 candle right here did not sweep 1055. And if you want me to zoom in for you, I will. Clear. All right. Almost got there, but it didn't. All right. So that is an SMT divergence. We see that ES did not sweep liquidity, right? But we see that NASDAQ did sweep liquidity right here. So we will mark this up right here. Boom. Okay. This is 1055 to 1130. Now we're going to go over to ES and we're going to take this line away real quick. And then we're gonna connect the dots or connect the lines. See? You see how this one's slanting up? And you can go in NQ, and it's clearly slanting out. That's an SMT divergence. When you get an SMT divergence, that is a indicator that the market is reversing and is going to go the other way. You almost it's like 100% winning strategy. I swear to you. I caught this trade, I want to say about right here on the 1 minute, because I went down to the 1 minute and I seen the little SMT right here. And I was like, oh, okay, bet that. So I saw it consolidating right here. I think I entered right about here and I took it up to here, got out, and then I seen it break this and I got out about like right about here. Okay, so overall though, if I were to put this together, my stop loss would have been right there. And right here is about where I got out. So you got about a 1 to 7. 107 risk reward. Okay. If I really wanted to, I could have put my stop loss really tight and put it right here, which would have been a 2 to 6, but I didn't do that. Okay. So very simple slash complex. You're gonna have to look through your chart, maybe go back, bar replay, and then back test this, and then you'll definitely see it. So going over to ES real quick. We're on the 1 minute still. Okay. So boom, at the SMT that's put in, you want to enter about buys right about here. After you see that SMT be put in, you see one of the pair put in a higher high and not a lower low, but you see the other pair put in a lower low instead of a higher high. That is your clear indicator that you can put a buy because one pair is always going to be lagging beside the other, basically. So very simple. And then every single time you get an SMT divergence, you want to look for it around about in between 10 to 11:45, just to be safe. Um, but yeah, this is a quick little recap trade that I took earlier today and made some good little money on it. But I didn't trade ES, I traded in Q. Um, nice strategy. Nice pips that are always caught on this. I know plenty of traders that are using also the SMT divergence. Most traders will like the easier stuff. This is a bit more complex, but if you master this one, I swear, right, you're gonna catch the best moves ever. So go back through, back test, scale through your charts if you got to. Um, mark out your lows, your highs, all that, you know what I mean? And then look for something like this. Look for a structure like this or a structure like this. You see that we also took out these, we broke the structure. We came out of this and we even see right here, connect it real quick. Boom. Look at that. This candle didn't even sweep liquidity like this one did. Now, I mean, I'm not just saying this is a divergent or anything. I'm not saying none of that. I'm just saying that this right here, right, is different than this one. And that's also how you can see a clear indication that we're going up, okay? Um, I focus on one pair though. So when it comes to SMT divergence though, I look for ES to put in the opposite of what NQ's doing. And there are some other correlating pairs, like I want to say the euro with gold, maybe. Um, no, sorry, euro with GBP USD. And how I'll show you right now. Okay, you see this? Clearly looking downtrend, everything like that. Boom. Okay. Go to GBP USD. Clearly doing the same thing. It's just GBP makes bigger moves. Okay. Euro's the same thing. GBP is the same thing. Got ES right here. Got NQ right here. You know what I mean? It's once you find these pairs that are correlating, oh my God, like what is your excuse for being poor, bro? What is your excuse for freaking being broke? Like there's no right here. You know what I mean? So yeah, go back through, man, and back test this. Comment below if you used this strategy before and if it's paid off for you. Um, yeah.